I've been dollar cost averaging $150 every 2 weeks into an S&P 500 ETF for the last 15 months straight. No timing the market, no chasing hype, just consistency. In this video, I'll break down why I chose to invest in this ETF, how much I've invested so far, the returns I've seen, my dividend income, and whether I'm feeling bullish or bearish about its future. And stick around, because what I've learned might just save you thousands. Part 1. Why I invested. Like many financially minded people, I wanted to put my money to work for long-term growth with minimal volatility and in an asset with a strong historical track record. The S&P 500 meets these strong criteria, offering broad diversification, consistent long-term growth, and historical returns of around 10% annually. That's why I chose to invest in a low-cost ETF that directly tracks the index, and the ticker symbol is SPLG. SPLG mirrors the S&P 500's performance exactly, just like SPY, but it's more affordable, allowing me to buy more shares for the same amount of money. I'm not trying to beat the market, I simply want to match it, stay consistent, and let the power of compounding do the rest. For me, SPLG is the perfect fit for building long-term financial security. Part 2. Total invested and results. I've been investing $150 every 2 weeks, and I chose that schedule because it lines up with my payday, making it easy and automatic. That adds up to about $300 per month. Sometimes, if I have extra cash, I throw in a little more, but honestly, it's usually right around $150 biweekly. Over the past 15 months, I've invested a total of $5,837.92, which has bought me around 88 shares. And as of today, my portfolio is worth $6,228.10, a 5.71% gain, or about $336.90 in profit. Honestly, that's not bad at all, especially considering all the market noise and volatility we've seen this year. Part 3. Why I'm not worried about the market. Yeah, we've seen pullbacks, recession talks, inflation, but I didn't panic. Why? Because over the last 100 years, the market has always gone up. It's been a wealth-building machine. Just look at investors like Warren Buffett, Ray Dalio, and Charlie Munger. They bought quality assets and let time and compounding do the heavy lifting. I didn't invest emotionally, I invest automatically. That's the power of dollar cost averaging. You buy during the highs and the lows, and over time, you average out your cost. Part 4. Dividend income. Now, this ETF isn't just about growth, it also pays a dividend with a current yield of 1.24%, and it's paid quarterly. Since I started investing in SPLG, I've received 4 dividend payments, totaling around $35 over the past 15 months. And yeah, I know it's not the highest yield out there, but SPLG is focused more on long-term growth than income. Still, those quarterly payments help boost the compounding effect. For example, my dividends have more than doubled since I started. My first payment was about $5, and the most recent one in the first quarter of 2025 was $11.72. And the best part is that it was automatically reinvested, buying me more shares, which leads to more compounding. Just imagine what this could look like with a portfolio worth millions. It's real magic over time. Part 5. Why I'm still buying. I'm not here for a one-year flip. I'm in this for decades, and I'm still buying every 2 weeks, no matter what the market is doing. Because trying to time the market is a losing game, but staying consistent is the real edge. When you combine the S&P 500's historical performance, dividend reinvesting, time, and the power of compounding, you're building a wealth machine like no other. It just takes patience. That's why I'm going to keep buying to make this machine bigger, stronger, and unstoppable over time. Part 6. Should you invest too? Now, should you invest in SPLG or any S&P 500 ETF too? Well, only if you're truly ready to commit for the long haul. That means investing for the long term, ignoring all the short-term noise like market dips, headlines, and panic, and staying consistent no matter what. It's not sexy, it's not flashy, but it's one of the most proven ways to build wealth over time. If you appreciated this honest breakdown, please like, subscribe, and share this video with someone who's trying to figure out where to start their investing journey. And I'd love to hear from you in the comments. Are you dollar cost averaging into the S&P 500, or are you focused on a different ETF? Let's talk about it. Thanks for watching, and I'll see you in the next one.